This video will discuss trading multiple time frame charts along with timing for doing an options collar trade against an open position. I did this video while trying to help a trader who is trading a daily time frame. The problem is that they're having large relative amounts of profit giveback along with exits that are turning profitable trades into losses. Also note that options trading, like this options collar trade that I will discuss, is not part of their trading plan. So the specific charts that I'm going to talk about are for a recent series of the IWM ETF trades, and the following charts are multiple time frame combinations. The daily chart only, which you've been looking at as I've done this introduction, a daily chart and 60-minute chart combination, and a 60-minute chart and a Renko chart combination, which is actually the combination that I like to use trading. So with this daily chart, let's start at yellow circle 1, and that was a buy done at 110.20. Now price moves to 114.16, but it isn't exited until the chart reverse and yellow square break of 110.37. Yellow circle 2. So after the move down, you can see that the IWM holds at 109.32 and goes back up. But there's not a daily chart buy until 112.90, which is $2.53 higher than the previous exit. The trade goes to 115.97 and has come back to 113.76 as that test of 114.16 as support is not able to hold. The next chart reverse, or the 111.62 price area as support, is the current intended hold of the trade. Now if there is a reverse in this area, that 112.90 trade will lose around $1.30 after being up over $3. So yes, there have been partial profits taken on each trade, but the give back on these trailing shares until a daily chart reverse is way too much, especially without any options collar trades done for protection. Now you're looking at the IWM 60-minute chart and the chart time frame that I actually like to use for swing position trading. The yellow dot at the left of the chart is a 112.02 sell with a 110.37 target 1. And that target broke straight through without any kind of stall, giving the trade an extended partial profit. As we went through support, it shifts to resistance, and it's the area that I want to use to hold the trade. Price went down to the 109.32 swing low, and I could accept $1.25 give back at this point if 110.37 breaks. When compared to the size of the partial profit and the gain at the exit. Now do note, this trade wasn't done on the daily chart. Only the exit of a long at the time. But if it had been done, it would have been a losing trade. You know, this was not the area that buy was exited. That exit was not until 110.37. Okay? So, I mean, this is a big reason why I just do not like these daily charts for this type of swing trading. It misses a number of trades. It incurs, too much give back. And the objective is swing trading for profits versus, getting the really long holds, almost like a buy and hold investment, versus trading. So, look at yellow circle 1. Now this is a failure setup of the 110.37 price after 2 prior hits and after the momentum extreme cross. You can see that the bottom of the chart where the blue line crosses back above the purple line after going below that horizontal line, the momentum extreme. Now, trade is long, actually a reverse of the sell at 112.02. After it goes up, there was a retrace. You can see how there was another momentum extreme. A partial profit was taken at 111.50, but there's no chart reverse to consider. And there's also a very clear support area. Resistance shifts to support. It holds. And there was no exit to the trade. And it was actually long at the high of this chart at 115.97. Now, compare this to the daily chart only. This trade wasn't available. You remember the buy was done at 112.90 instead. Just by using the daily chart for direction and the 60-minute chart for timing for that direction would have given far better profitability, both in terms of profit give back as well as directional re-entries. And even if that yellow dot sell wasn't actually able to be done on the daily chart because it hadn't reversed yet, it still would have been a far better exit than doing nothing until 110.37. And then this buy could have been done versus the 112.90. Okay? So, as I mentioned though, I prefer the 60-minute chart as the directional chart instead of the daily. And have actually come to like using a Renko chart for my second chart as a, multiple chart combination. Now, time frame is somewhat different. So I have a multiple time frame combination as well as a multiple chart type combination. Up at the top right corner of the 60-minute chart, you see the yellow circle. Now this area was the timing for an options collar that was done against the long 110.30 buy. The trade was to sell a 115 call at $1 and buy a 114.50 put at $1.11. When this trade was done, great partial profits were taken, and the options collar will protect any buy give back to that 114.78 area as support. This option trade timing also syncs very well with the Renko chart that I'm going to show you next. Here is the Renko chart, and I'm using a 0.3 brick. This happens to be a TradeStation chart. You can see the sell and buy trade setups. That would be yellow dot 1 and yellow dot 2. And these trades synced with that 60-minute chart and the sell and the buy discussed. You can also see the buy hold on the retest, that yellow line, previous resistance shifting to support. Now look at yellow dot 3 though. This was another trade that was done, and it's an add-on to the 110.30 buy. Never would have been available as a trade setup on the 60-minute chart. So this is where there's benefits on a multiple chart type combination. It is actually the sync with that initial 112.90 buy on the daily chart. So this is an add-on to the yellow dot 2 buy and further increases the profitability of the buy swing. So this ended up working out very well. Now, remember the yellow circle at the top right of the 60-minute chart. That's the yellow circle that you see at the top of this chart. This is the timing for the short call, long put options collar that we just discussed when looking at the 60-minute chart. The buy was exited on the combination of the price envelope reverse. That's where the green dots on the bottom shift to the red dots on the top. But this reverse occurred without an actual sell setup besides selling the chart reverse. However, once this buy was exited, that short call long put combination becomes a synthetic short instead of a buy protection trade, and it is giving downside participation when there wasn't a trade setup to go short, again, unless the initial reverse was done. This was the case for this chart combination. But I also want you to look at how this collar would be protecting the profit give back on that 112.90 daily buy that is still long from the way the daily chart was being used. Daily chart hadn't reversed. Price is well above that 111.62 area that was being used as an actual support price. So I don't like that daily chart, but at least there is a way to be, protecting giveback. No, you wouldn't be making any money at this point. You'd have your, your buy, and you would have your partial profit. Then as, price is going back down, you'd be losing profit on the buy until you went below 112.90, and then you would actually be losing on the trade itself. But for that whole period of time, the option synthetic would be gaining. So, the two are virtually a wash. Now, you should be able to see my last full brick is a Renko brick double bottom. And we have 113.10 as next support. Saw that on the 60-minute. Essentially the same as the yellow-blue line underneath this area. But at this double bottom with this trade, I went ahead and sold a 111.50 put for 40 cents. So once this was done, the options collar actually has 3 legs. Short the 115 call at $1, long the 114.50 put at $1.11, short the 111.50 put at 40 cents, making this whole trade done at a 29-cent credit. So at this point, for the daily chart trader, it would protect all the give back to that 111.62 support area if the chart doesn't reverse again and go back up. For the 60-minute chart trade, this becomes an option short trade that happened when the long IWM was exited, and it can still participate all the way to 111.21. We were at like 113.76 when the trade was done. So this still could participate to 111.21 if that would happen. And that number is the 111.50 short strike in the put spread minus that 29-cent credit. So, since this video discussing the trading of multiple time frame charts or different chart types, again, I showed you my favorite combination at this time, which is the 60-minute chart with this Renko chart. But what's most important is how profit give back can be decreased. In this case, for the daily chart trader, especially when the options collar trades are added to an existing profitable trade. But my recommendation is still for, swing trading and trying to come up with, that balance between being able to, hold a trade for a continued move, but without missing so much of the move because of the lag of the daily chart. This 60-minute chart has worked, very well as a position trading chart. Before I was using the Renko charts, I was actually, using another time frame chart. But I don't like the way faster time frame charts look. It's always been a chart reading issue for me, which is something I was searching to try and fix. Didn't like the different time frames, tried to replace those with, different tick charts. Never really got a combination I liked, and just started doing some searching and ended up seeing these Renko charts, and since November now, this has been new. Since November of this year, started using the Renko charts as my multiple chart combination with the 60-minute charts.